What's your sense of how things are looking in the mortgage market right now? Are you getting more people trying to buy homes and refinance? Is it looking good? Is it looking dire? What's the sitch?
Look, it's still a little bit quiet. It comes in spits and spurts. So it's more upbeat than it's been the last couple of years, but I wouldn't call it busy. But it's always a little bit quieter in the winter months. So I guess sort of the vibe in the market at the moment is a little bit of, I guess, nervous anticipation. It's like, are we there yet? Are we there yet?
Yeah, which way are we going to go? Up or down, up or down, up or down? So there's been a bit of that fluctuation, but it looks like mortgage rates are coming down and ANZ have just cut theirs. So why do you think this is happening and what do you anticipate is going to happen going forward?
Yeah, so the ANZ's trying to get in first, and I guess that's good for them because people like us end up talking about them. So they're trying to get the headlines and all that sort of stuff. So the OCR review is actually not until next Wednesday, but it seems like, I hate to say done deal, but it's pretty well a done deal that they'll drop by 1/4%. Um, and then it'll be interesting to see what the Reserve Bank says next week because it's one of what they call one of their bigger reviews. So they actually give an update on their forecasts on where they see things going over the next 6 to 12 months or so. So they haven't done one of those updates since May. So everybody will be looking pretty closely at what they've got to say there. Which direction they think it's going to go in. But I should say too that a couple of the other banks have already reacted to ANZ, and I expect the others will follow as well. But kudos to ANZ for getting in the headlines.
Yeah. Well, I've also noticed too, Tony, that you're talking about, say, a 0.25% reduction from the Reserve Bank, but it seems that those full deductions are seldom translating over to the banks themselves. Like ANZ's change was like 0.1%. So
Yeah.
who's pocketing the extra 0.15? Like, what's going on? Is this dodgy goings on, or is this just a bit of market finessing? What's happening?
Look, the market prices in anticipation of what the Reserve Bank might do. So they'd already anticipated that they'd be dropping, and so they months ago they'd already priced in a lot of this change. And I guess when it's confirmed, most of it's already priced in anyway. So that's probably what they're reacting more to was the jobs data that came out last week. It's a little bit weak in the employment market, and they're going, okay, that signals to us that the Reserve Bank might need to do a little bit more than what they've indicated to help out the economy. So, yeah, it's a little bit, they don't go completely hand in hand. The floating rate probably will go pretty close. Most of that will be passed on, but the fixed rates operate, sort of 6 months to a year in advance of what the Reserve Bank is doing.
Okay. Well, let's talk about something that I have some personal interest in, being a homeowner who is about to come off our fixed rate, which has been quite a good rate because we've been fixed for 4 years. So
Oh, nice.
what are some options for those who are in a similar position in terms of looking at these mortgage rates in the next few months?
Yeah, it's always a bit difficult to pick the absolute best rate, and so it's quite personal to your situation, like how your cash flow is going, how comfortable are you with mortgage rates going up and down. But yeah, sorts of things you can do is you can split your lending. It doesn't all have to go on the same rate, and I guess that gives an advantage, particularly if you've got a large mortgage or if you're a bit tight on your mortgage payments. It means you're not putting all your eggs in one basket. If you have half your mortgage coming up in a year and another half coming up the year after that, then it just sort of smooths everything out. Um, Other thing people like to do, particularly when interest rates have been a bit higher, is they set up a revolving credit or an offset type facility. And that, in effect, allows you to park any savings or spare cash that you have at that moment against your mortgage. It reduces your interest payments and gives you a bit more flexibility, but also allows you to draw it back out, so you can put your rainy day fund in there. And then if that rainy day comes along, you can pull it back out of your mortgage without having to ask the bank.
Right. So if you're a little more disciplined with your money and you know how to keep your savings account topped up, that could be an option for you.
Yeah, and it's not for everybody, and I guess this is where an advisor can help you to sort of look, how do you manage your credit cards, all that sort of thing can often reflect how well you can manage your mortgage as well, but can be a useful tool.
Well, it's interesting because I think there is a real gap in terms of knowledge around this stuff because
Oh,
I
yeah.
feel like This was never taught to myself or my husband. And you can pay off your mortgage a lot quicker if you actually have the right tools and the right knowledge around how to work it in your favor. Isn't that right, Tony?
Yeah, look, you can. I've seen loan structures where you, over the life of a loan, you can be saving 100, 200K in interest. Just by getting off the default, default sort of structure that you might be handed up. So, and I guess having an advisor in the mix means that they can check in with you every year or two and just see, how we're going. So sort of be like a little bit of a coach to make sure you get where you want to.
Nice. Well, look, here's the unanswerable question then before we wrap up this morning. How low can we go, Tony?
Ooh.
Yeah, look, it depends on who you listen to. Like some of the economists are saying this cut in the OCR that'll happen next week, that's it. And then others are saying, no, there still could be another couple coming later on. So it's a bit of a delicate balance at the moment. There's a real, you asked me about, how the market's looking at the moment. Is the rural market is leading a bit of a recovery at the moment, but places like Auckland and Wellington are suffering a little bit. So Auckland and Wellington is 50% of the economy. I would say that you can't leave that 50% of the economy behind, and the Reserve Bank may well have to step in and do a little bit more than what they've said already. So the more aggressive people are saying, we could see another couple of drops after this. So we could see, another 0.75 coming off. But, we're largely at the end of the road. We've already seen over 2% drops. So is it going to drop by another quarter or another 0.75? We're getting down to small margins now.
Amazing. I hope you enjoyed that as much as we did.
Yeah, don't forget to like and subscribe and turn your notifications on so you don't miss the next video.
We'll see you in the next one.